Hello, everyone. Welcome to the Midweek Software Strategy Session. I am Stephen Vetterl. Today is the 19th of May. We are starting to see some volatility in almost anything attached to the JPY. So stick around today. We're going to talk about maybe some adjusted strategy related to that. Let's double check if everybody can hear my voice okay and see the risk disclosure screen, please. The Q&A window is open. Feel free to ask questions as we go through today. Try and answer some questions at the end. Put your questions, if you could, please, in the Q&A window, not the chat session. That would be great. Okay, so again, for everybody just joined us, my name is Steve Vetterl. I am the CMA, but I look at myself as the risk manager. Do keep in mind that we always need to go through the risk disclosures and disclaimers. So, trading the foreign exchange markets carries high risk and may not be suitable for all investors. This is quite true. So I try to each week challenge everybody out there. We are developing a very large base of Auvorians as subscribers, which is great to see. But it's important that everybody just understand what risks are associated with Forex. So as far as sharing of any of the results from using Alexander, Iris, or Einstein, please do not use the term company recommended settings, okay? So AP doesn't have any recommended settings. I'm the one that's recommending settings. They're not a financial advisory firm either. They just license software that users can use however they want at their own risk and discretion. So some software does come with default settings upon initial setup, which I've actually made some changes to today, so please stick around. Get everybody on this call that is not or does not have the time. They could certainly watch it. It'll be recorded and put in the back office. But we at Auvoria Prime have nothing to do with the customer's broker account. So we don't solicit or take investments. We don't recommend any brokers. So we just license software and sell amazing education that users can learn and potentially benefit from. And that leads me into the best piece of education, which is Daisy Duncan's Forex Basics course. So with a lot of the questions that I've been getting both via email and in the Q&A window, it has become apparent to me that a lot of people have not made it through the basics course. So please do yourself a favor and go through it. If you don't, I promise you, you are selling yourself short. It's actually some really good stuff. So for those of you that don't know who I am, I host a call at 10 a.m. Pacific time on Tuesday and Saturday every week. It is my goal. You can see in blue there on the screen. That is my email address. If we do not get your question, it is something complex you feel you need to email me, make sure I know a couple of things before you send me the email. And I'm actually going to give you a link to this and talk a little bit about our new channel that has been started. So, and by the way, we'll get into the moves in EJ. So the Euro JPY, we'll get into that. There's a specific reason that it has broke and just ripped up. So we'll go through that. Just bear with me here. I wanted to get through some just corporate announcements I think is pretty important to everybody's level of education here. So we have a new channel out. It's called Trade Tracker with me. So we have a lot of subscribers already. This is great to see. Thank you for everybody that is participating. I will be putting in all kinds of stuff in this throughout the week. Changes in strategy, stuff that I've done, especially for following along, looking at my FX Blue stats. I'll put the link in there to it again. I had some problems with the VPS the last couple of days, so we've had some disruptions in trading inside that account, which trades Einstein. Also, this is really good for me because I never really had, other than these calls, a way to sort of communicate intra-week or the beginning or end of the week, anything that I'm seeing that's going on. You know, as many of you may not know, we warned of some volatility in this arena, especially anything attached to the JPY, because very simply, a lot of central banks are really gotten out there, especially with Chairman Powell's 60 Minutes interview on Sunday night. It just blew up the markets for the better in equities because we had a huge rally in this country. So let me just start, since I've gotten a lot of emails with people that want to see. Let me just shift over to the other screen. Okay, so here we go. All right, so hopefully everybody can see this is my Einstein algo stats running on the FX Blue account. We actually figured out what was wrong. It took a couple of emails to the MyFX book folks, but we found out what was wrong with my account was attached to an old username that they're going to be resetting. So hopefully that gets done, and we can have both links to share with you guys on some of the views and stats and so forth on my account and how that's changed. But essentially, we'll go through this a little bit. Want to talk a little about just different ways to kind of dice this up. I first want to start the call off with anybody that has not seen the news. This is last Sunday's Chairman Powell discussion. So essentially, just to summarize the cliff notes, if you will, he came out and basically said, hey, there's a lot more stuff we can do to support markets and provide liquidity, and essentially the different types of instruments that the Fed has available to it in terms of being able to stabilize markets, which is one of their primary goals, also to provide liquidity, efficient and orderly markets, execution, all that fun stuff has been primarily the goal of most central banks. And I think that was a surprise to the market because, as you can see here on the next chart, this is a chart of the S&P 500 on a daily chart. This is the 500 largest companies in the U.S. If you're not familiar with this index, it's one of the most looked at in the world. So I always recommend, as we'll move into a little further in our education, you guys are going to see me starting to bring different pieces of technical analysis into the mix. This is nothing more than a candle-based chart, a Nielsen candle-based chart, which is one of the easiest ways to see movements in the market. So as you may notice with the top here, we got closer to 3,400 on the S&P, and we dropped all the way down to 2,200. And now with a lot of liquidity and backstopping, if you will, that the Fed has provided along with other central banks to equity markets around the world, we've seen a pretty big lift. We've lifted into this range that I've outlined here, running right around just under 3,000 to down at the bottom around the 2,700 level. So until we break out of this tight range, it's probably going to be a little bit of back and forth. But there is a chance today, albeit not a lot of volume, as you can see so far today. We are only at, New York's only been open for a few hours at this point, so it'd be interesting to see if we can break up above this level, which may bring some more volatility into the currency markets. So I'll keep that as well. So this is the calendar. I had mentioned ideally if we were ahead by Tuesday morning, I'd probably have any positive-based accounts turned off for the week, just because we are fraught with different types of news stories, both tomorrow all the way into Thursday. But the problem is, and you could see here just by looking at, let me switch over here. Okay. I'm going to open up the culprit here, which has been the Euro JPY, which is the currency pair that we're working on the screen. Okay, you guys can see I've drawn two red lines. Okay, so we basically have had a wedge forming for quite a while, and we broke out of that wedge today. So many times a breakout from a wedge can have a really vicious move up, and that's essentially what we've seen. So that's why There's been, essentially over 150 pip moves, all the way up to 250, depending on where the software was executed. Ideally, in terms of just off the cuff thinking, I prefer to see if a wedge breaks just from a manual or discretionary basis, and I would want to ride with the trend. Okay, so and it's just continued to just essentially blast stops out up to the next important level here at 117. So the question now is, okay, Steve, hey, this is all great stuff. Thanks for the education, but what do we do if we're in drawdown? Okay. So of the accounts that I've seen that have taken some drawdown, again, we'll get back to the discussion of over the last year that I've observed this software running in various forms and versions in the past, with different organizations and the like. One thing I can tell you that I've seen is that the software has always pulled itself out of a drawdown. Now, that statement comes with a whole pile of variables, right? And one of the things to understand is that if I was ever to make a suggestion that the software be turned off in drawdown, I'm going against what it's designed to do, and that's to get you out. Okay, so this is why we talk a lot about, have you run a demo account? Have you run a live account? Are you familiar with the stats? Have you hooked the account up to my FX Book or FX Blue? If you need the links for those, just drop in something in the Q&A asking about, yes, I need the link, or we can even put a video on our new Telegram channel to show you how to connect it to it. But I think it's killer in terms of going through the stats, and we'll cover a little bit about that. But just understand that I don't think it would be prudent for me to think that somehow I'm smarter than the Forex markets to step in and tell you to turn it off when it's in drawdown. Does that make sense? If you don't think it does, tell me why in the Q&A. I always address, as many of you will probably see, I answer emails, I address questions. Yes, it does take up my time, but I think it's important to establish a feedback to the Auvorian community, because we love all you guys. But I think it's also important to understand that the software has done well in the long term, but it has had periods of drawdown. If you cannot look past in drawdown, or a week or 2 days, or heck, even if it was a month, you have to take a look at the risk associated with your account. And I can tell you all the settings that I've seen that have been taken pictures and posted or sent to me, the vast majority of the settings, they were off in some form or another. And one of the biggest things I saw off, which was just shocking to me, let me just open up the settings here, is this right here. I saw max lot size numbers that were like bananas. They were like 1.05 and 0.48, and I have no idea who even told you guys to put those max lot sizes at the level, but they're nowhere near where I would, unless I had millions of dollars. I understood the software exceptionally well. I've tested it out. I've looked at all the stats, and I'm comfortable playing around with the settings, right? So if you fit in that category, much of these presentations from me, it's not going to be helpful for you, okay? What will be helpful is to make sure everybody is really educated in understanding how important it is to have an idea of what each of these settings do. So I would encourage you to go back through the last couple of weeks and look at all the presentations I've done. There's tons of nuggets you can pull out from all the old presentations, and all the important things that go along with that. So what some of you are probably noticing is, hey, Steve changed his range multiplier and his position size multiplier. Yes, I did. So I changed it because I want to see, I've seen some solid evidence. This is not a recommendation for me to go out and change the range multipliers, okay? I just want to see what it's doing. with some decent evidence I've seen presenting the two that you see. So I've changed my position size multiplier to 1.5. I changed my range multiplier to 1. I'm going to be posting some thoughts on why I did that. Possibly Saturday. I'm trying to still developing a little more data on that. We're going to have a special guest coming up one of these Saturdays that has brought some fantastic evidence to me that'll show me maybe I should be taking a look at some changes to this. Also, the same thing with the currency. So I'm just not liking, quite frankly, again, bring more evidence to me. As some of you may know, Auvoria Prime is now just 2 months old. So we've still got a lot of data to collect. And I think it's important to understand that 2 months of data, even though we have tons of data back from previous versions of the software, we still don't have a full data set, in my opinion. So I'm going to be having a call this week, hopefully later this week, with the developers, making some suggestions on settings and so forth, bringing a whole new data set to them to analyze where we are and so forth. But I think it's important to understand that any changes you make, you should want to pay attention to what the stats are on it. And I know there's a lot of people that look, I don't have time to go through this. And then, that's kind of why I'm watching you, Steve. And, I'll try to get you as much as I can as far as data on all that. And all that stuff. But I think it's important to understand some of that. So let me just take a look at a couple of the questions that are coming in here because I'm seeing some really good stuff. Yeah, so it looks like a couple of questions I've gotten on the range multiplier and the position size multiplier has definitely had some negative effects on it. So that's why I'm kind of just testing it out inside this account here. I want to see how it's doing. So that's why I had mentioned in the beginning this wasn't a recommendation to change those two. All right. So what else did I want to address? So this is a link. I'll drop this in the window. This is actually a link on how to connect the MyFX book to MT4. I'm also going to put in a link on the Einstein as well. All right, let me just take a look at some questions. It's pretty much all I had, you guys. I wanted to keep it sort of short so I can go through some of the Q&A. I think the first question is, should we remove Euro JPY? I mean, honestly, it's just looking at the stats here. Here, I'll show you. If you're on FX Blue, which I'm showing right now, let me just make sure I'm sharing the right screen. So if you could see my FX Blue Einstein account stats, you want to go into here just to see the 3 pairs that we're trading. And I don't really need to dive into any adverse excursions in terms of analysis, but let's just fair to say we've had a problem with Euro JPY. So right now I'm looking at some data that's may bring a replacement pair in for that, which I haven't sort of finalized, but it certainly has not done that well in looking at just the to jump back to the software, just show all. See if we get lost, you can just click this box here, it brings all 3 back up. For the participants that are raising their hands, guys, I don't look at that. Just put the Q&A in the questions and answer window, please. Okay, so you can see that the Euro JPYs, the P&L, which is right here. This is live P&L. This is the currency that's really bringing the whole, 3% loss plus per week inside this account down. So, again, I know I'm getting a lot of questions here. Should we turn this off? Again, then that means that I'm telling you that I'm smarter than the software in terms of having it turn itself off. Let me just go through some of these questions here. Is it a better market for our Alexander's performance when we're receiving a bunch of trade notifications and receiving just a few? Talking about just trade notifications, Don, from Alexander. I mean, if it's finding more trades, I would think that's better, right? Why does the settings keep increasing in lot sizes such as your? Okay, so Ray has a good question. It says, why does the settings keep increasing in lot sizes such as the Euro JPY, sell 0.02, 0.03? Because this software is designed to go after a trade with greater and increasing risk. It's what's called a martingale strategy. Essentially, it's just increasing the trade size. What that software is basically telling you is that it feels it's right, even though it's taking a lot of heat in drawdown. So the larger the trade size that you put on, which is obviously more aggressive as the software is taking successively larger trades in terms of lot size, tells you that it's trying to build up a bigger trade size in the aggregate as a whole. That'll actually work out for you if the currency moves back against the trades. So it doesn't need to move back all that much if it keeps putting much larger trades on as that rubber band, as I've described in previous week, gets stretched out. I don't know if that makes sense or not, but it's actually a very effective strategy, and that even though you may be taking some heat, a larger trade goes on. It just essentially doesn't need to move back all that much to put it back in a positive P&L, or having the account be in a positive equity position before it starts getting out of the trade. So that's a good thing. That's why I'm very hesitant to always, trying to step in front of the software and suggesting to turn it off. It's really the bottom line is that the settings become so much more important from an aggressive versus conservative standpoint, just because of the risks associated with it. So most of the snapshots I've seen of some of the accounts in drawdown have had comments associated with them to the tune of, well, I can't afford this, or this will not pay for the software each month. And what that tells me is that that person did not do an accurate risk assessment, and they put money to work in a live account that they probably can ill afford to lose. And I would not recommend that. If you need to take time, build up more savings to do that, that'll be the important thing from a risk standpoint versus taking money that you cannot afford to lose out and risking it. If you are in profit, turn off. Yes, that's correct. Sounds like bad advice, doesn't it, Vince? If you're in profit, turn it off. But if you're in a -6, let it ride. That is correct. Because if I'm telling you to turn it off, Vincent, that means that I think I'm smarter than the software, and I'm not. Here's the FX Blue link for those that have asked for it. Just hit the trade tracker. Spread the word on Trade Tracker, guys, because I'd like to see the subscribers to Trade Tracker in the multi-thousands. That way, everybody's getting communication from me directly, and it's not coming from an upline or downline. I've seen a lot of that information get really clouded and show up incorrect. So spread the word to all your friends. All right, so the video will be coming next. I see a lot of questions on that. It's just a video. It was shot by a fellow Auvoria and did a really good job. If you are in drawdown still on Thursday morning, you want to leave it open to give it a chance to pull out, do you go in to settings and remove the turn it off on Thursday? No, I don't. Have you seen Tyler's spreadsheet for different sized accounts? It suggests increasing max lot size if accounts go beyond a certain size. So for a $10,000 account, the max lot size would be higher than 0.12, for example. Can you please confirm this? John, if you're listening, you can hear this. Can you send me an email with that question? I've seen They aren't quite the way I would want them to look before I offer up a spreadsheet. I have to get compliance to approve it. The problem with the spreadsheets that I've seen brought to me is that they're putting all kinds of performance assumptions in them, which is really not wise for someone like me as an advisor to be sharing with such a large community. And I've gotten a lot of emails, which is great, of people that have live accounts that have a lot of the basic settings on, and they're just not seeing a ton of performance for accounts above 100 grand. And probably the strange thing about all this is that they're so focused on working on smaller accounts that I really haven't done as deep of a dive that I started to do midweek this week on trying to get the best settings for a larger account. And that's actually one of my primary focuses for discussions with the developers this week, is to do a deeper dive so I feel comfortable with the settings on a larger account. So a lot of them, the questions are about drawdown. Courtney, start hour for Sunday. The reason it's that way is because we prefer to have the markets open 2 hours after the software start trading 2 hours after the market opens. So my friend Bo said, "Hi, Steve. I see you have the software enabled to trade on Friday. Should we have it enabled for the week?" I only do that because if the software is in drawdown, I just want it to continue to work. Steve, can you ask the developers to make an opposite version of software instead of being in 6% drawdown? Can we be 6% up for the week? I would agree. No, Trevor. The max lots size should not always stay at 0.12. But keep in mind the settings you see here on this MT4 platform trading on Einstein are for small accounts. They're essentially out of the box settings, which I've made some slight adjustments to, probably to the detriment of the account, but I want to see how it's going to do. This is the beauty of playing around inside of demo accounts, right? You can see where all the settings make changes and how things play out, but I want to see it for myself. The max lot size could always change. And here, let me show the settings again. So this is the max lot size right here. That's just the out of the box setting. You can always make changes to this. But once you get above 10,000, certainly above 100,000, you're going to want to make some changes to max lot size. So stay tuned on that. I'll have more information coming on that. It's going to be a shorter call today, guys. We're already half an hour in. Let the software do its thing, Michael. Mara, you could always select currencies with less volatility and smaller daily ATRs. These are just the first 3 ring. I've seen data that went across all 25 currencies from a very smart Auvoria member who I hope to have in my coaching camp with me for. And he's done some exhaustive studies, some of the deepest research I've seen so far on all 25 currencies. And there's been some sort of startling discoveries in there of what currencies work the best with this martingale type software. I'll take a look at that, Mike. If you could send me that link, please. That tradingview.com link, Mike M. Send that to me in email, please. What to do with an 11% drawdown? Same advice I've given before, Frank. You got to let the software work its way out of the hole. It's done it before in the past. I have confidence in the software, but it can take some time. I see you don't have sequence levels 3 and above. I'm not sure what that means. Please explain the P&L. P&L just stands for profit and loss. How could you tell if it was the Euro JPY that was causing the massive loss? because it's taken, in my account, the Euro JPY, which is open on the screen right here. It's taken a lot more heat than the other two currencies that are currently in this account. Now, Sophie asked a good question. If we were in abundance of drawdown, would you advise to continue to accept trades or pause? Again, right? If I had said to turn it off if you're in drawdown, I'm essentially saying I'm smarter than the software. I'm not. So why wouldn't I let it do its thing? I hope that makes sense to you guys, because I'm not smarter than the software. Okay, so a lot of these questions are the same. I'll tell you, Anonymous, this is actually a good point that, honestly, if you guys are setting up a demo account, in my opinion, from at least the data I've seen, I would want the demo account to be at least $5,000 or $10,000, because the software just works much better on larger accounts. You've got more room to take heat. I know that sounds counterintuitive, but it's true. But essentially, does the software do cross-pair analysis of its positions, or does it analyze each chart independently? That's actually a good question, Bo. I don't know the answer to that. If you want, I can ask the developers that. But send that to me in an email, because the problem with this, as soon as we close Zoom down, I can't see this Q&A. There's like 75 questions in here, and I've made my way through maybe half of them. So if you think the question is exceptionally important, send it to me in an email. If you don't want to do that, you can certainly ask it next week. We'll try to get through them. I have Einstein running Sunday to Tuesday, so Wednesday, Thursday, Friday, software will turn off and leave trades open to run. Would it be better to keep software on rather than shut it off and not control trades during the week? The only reason, single-handed reason, that I do not, unless I'm in drawdown, want the software trading on Thursday and Friday is that the win rates for the patterns that almost every Forex software that is a automated algo trades is much lower win rates than earlier in the week, because there's more volatility associated with Thursday and Friday. Now, is that a case every Thursday and Friday? Probably not. But the data is overwhelming that the best trades are Sunday through Wednesday. I'm hearing a lot of questions surrounding so a lot of the questions that are surrounding the Euro JPY are, should we remove the currency pair? If you're in drawdown, obviously I wouldn't do that, because you want it to work its way back out, right? But I prefer to have it running to dig myself out over a period of time. And I know this may seem like, well, I'm new to Auvoria Prime. I'm new to, whatever it is, Alexander or Einstein. I've only seen a drawdown in the account. I haven't seen it become successful. So it's kind of like, hey, show me the performance, right? You guys are going to have to trust me. I've seen the performance. The problem with compliance-wise is I cannot show any of the FX Book links accounts that would justify this. So I would say that there's probably some of these links floating around some of the bigger groups, upline and downline. If you're not sure how it's performed over the long term, you could probably have somebody show that to you. Yeah, so anybody that's sending a email to me, if it's a question on settings, I want the My FX Book link to it. If you guys are uncomfortable with emailing links to stuff, you can actually lock out part of the information. You can lock out all kinds of stuff. I just want to see the data, right? If you want to lock out any kind of personal information, that's fine. But I just want to be able to see the data and a full picture of the settings window, because I'm talking like 90% of the emails that I've gotten, something was off in the settings. And many people sent me emails saying, well, my settings are just what's out of the box. And I took a look at them and they weren't. So I would double check that against the settings. You're welcome, David. Can I manually put trades and cost average myself or put in double trades? I would not do that, Hamza. Do not mess with the software by getting in there and thinking that you're smarter than it, putting in your own trades. I would not do that. Anybody that I think I have the wrong settings, I'm in a drawdown. Yeah, just double check the settings to some of my the last week's settings that I had. Because remember, I made some changes to the settings this week because I want to see a little crazier movement in here, maybe to the negative of the account, but I just want to see how it acts. So if the auto trader turns off Einstein, will the software still work to some trades to try to end up with a profit, or does it shut down completely if auto trading? So if you're in a drawdown, the software for the trades that are in drawdown, it will, and I actually need some clarification on this from the developers, so forth. Actually, Tyler, do me a favor, post in the software settings analysis chat with all the directors. I want to know the answer to this question live. I don't want this emailed to me. So the question is, if the auto trader turns off Einstein, will the software still work on some trades, essentially open trades, to try and end up with a profit? Or does it shut down completely if the auto trading is already turned off? So I've gotten mixed answers to that from different people, and it's something I'm actually going to get some clarification on when I talk to the developers. So, and I see how you say there, Rika, that you set it to stop trading on Thursday midday. So stay tuned on that one. So for the people that just joined us, I'm only in about a 3.25% drawdown this week because the software and the VPS I'm connected to it, I had some problems. So the auto trading button that you see me pointing at right here was actually turned off for a chunk of yesterday, which is probably good timing. What single piece of advice to give to someone just starting this software? So Jennifer, the best piece of advice is put together a trade plan. It doesn't take that long. I know I got to get to you guys the one-page trade plan that I have in PDF form. It'll help sort of just put it together. But, just go through the Forex Basics course. Obviously with the Days A Duncan, you want to do that first. And then, take a look at the software, set up a demo account, do it of at least 5 Gs in my opinion. And then stick to the basic settings out of the box. Let them play out. Again, we've only seen this working for 2 months. Many of the senior people at this organization have seen this software run for a long period of time, and they've made changes to the settings that are different than the real conservative settings that come essentially default. So and maybe that's partially my fault, as I've been focusing too much on looking to get these settings perfected for smaller accounts, which I think is important. But this software runs much, much better on accounts over 5 and certainly over 10 grand of live money. Let's see. Philip, can you send me an email on that question? It's kind of confusing. When in the week do you stop accepting trades if you're in big drawdown, or do you? When in the week do you stop accepting trades if you're in big drawdown, or do you? I let the software play out. I don't want to step in front of that. Again, I'm beginning to sound like a broken record on this, but I don't think that this can't be said like too many times. Just let it play out, guys. Drawdown may be painful for you, but the software has always pulled itself out. Again, questions like, what do I do if I'm in drawdown? Let it play out, guys. Have some patience. No, the week's performance does not go into the overall account's performance. Here, let me jump back to the FX book account. See this right here? I'm highlighting it. It's the total return of the account, which is down because of the drawdown. Okay, so let me jump over to the other screen to answer this next question. You guys are asking some good questions. Keep them coming. All right, so I'm switching over to the PowerPoint screen. See that email right there? For about the 10 people that have asked me this, that is my email address. Okay, so a couple of rules again when you send me an email. I don't have a problem with it. Please don't write up an entire book and send it to me though. Just give me a link to your FX or your my Blue FX accounts so that I can see the stats. You should take a picture of the settings, and explain what's going on to me in a few sentences. I don't need an entire book because it takes too much time to read, guys. Scott, this role's taking an increasingly more amount of my time. All right, like how much do you suggest on live? I don't know. Anything Oscar over $5,000. I don't know the answer to that, Christian. What exactly happens to the open trades after the software turns off on Thursday? What I've always observed is that the trades stay open as it tries to pull itself out, and then they carry over into the Sunday opening. Most of these questions are along the same lines. What to do? Okay, Cameron, and we're going to be seeing more and more information from Cameron. This guy is the man when it comes to this. So he's done 260% over the last year. Yes, with some different settings, but with an average of 5 to 15% drawdown along the way. I find that drawdown is our friend. Love it. Good stuff. Leave that out of Truncher. Oh, here it is, right here. So I put the link in for those that asked to the FX Blue account. You can see my stats. And what I'll probably do is, if you guys want, I can actually take a snapshot of the settings and drop it in the same window, right? So one thing that everyone, and I know globally there's different financial institutions that may differ from the SEC or FINRA here, but keep in mind these settings are not reckoned. I'm not employed by Auvoria Prime, right? I'm essentially a contractor. So the settings are just what's recommended for someone that's starting off small. We'll get into some adjusted settings once we have better data. And heck, I imagine we'll always be doing some adjustments to the settings, right? In the spirit of Kaizen, which I think is important. But all I'm doing is sharing my experience, guys. That's really the key. Let's see. Yeah, I tell you, this is actually a really good question. If you could, David, just ping me that stuff on Telegram. That would be great. That'll help out in the discussions because I'm certainly doing the learning process here. You can always change the pairs in $1,000 account, but we usually recommend one pair in a up to $1,500 live account. Just one pair. Okay. Why don't you guys provide a lesson on the back end for a beginner to have at least an idea of what is trading looks like? Not sure what you mean by that, Oscar. Those look like the wrong settings on the 12K account. So there's no had to have a max lot size of 0.96 on a 12K account. That's crazy. So some of the people set the max number of levels to 6 with correct max lot size. I'm not going to get into that. I know there's a bunch of questions we've had. So, I would say stay tuned on that, you guys. Let me just double check. Is there everything else I want to cover here before I end this meeting? All right, so I'll get you guys the links. Oh, okay. Here's so this is a chart. Let me switch over real quick. Just going to show this to you guys real quick. This is a chart of the Euro US dollar. Okay, this is a daily chart. Okay. See, we're forming another wedge. Okay. Now, I'm not making any inferences about this other than I'm pretty sure this is going to come to a wedge and it's going to break lower. Okay. I could be wrong, right? I'm not telling you this because I want you to turn off a pair or turn off the software or anything. It's just I want you guys to sort of get in the mindset of just at least basic technical analysis. This is a candle chart on a daily time frame of the Euro US dollar. Very simple chart. Couple of lines drawn for broader channel down that you see without the wackiness related to the C19 moves in March and April. But as the currency begins to stabilize, as we've seen over the last 2 months, it's forming in a wedge that's coming to almost a point. Typically, when it comes to a point, it will break higher or lower, depending on the current climate. So I know I've gotten a lot of requests for in some of these questions some more technical analysis, but I want to at least keep it at a real basic level for now. And if you guys want to follow me, this is my Twitter handle. So I've gotten a couple of questions on this. So if you guys want to follow me on Twitter, you can. By the way, if you haven't already, set up a Telegram account and make sure you subscribe to obviously the Auvoria Prime official channel, which is corporate. And then there's a number of other great ones as well. But do make sure you spread the word out there because I just don't think we have the participation yet from a Telegram subscriber aspect. And I'd like to see the subscriber base in the multi-thousands. That way we know we're being able to spread the message more broadly rather than relying on, rumors and hearsay and all that fun stuff that has a tendency to get all clouded and muddied up as we go up and down the down line. All right, guys, 50 minutes in is all that I have. This is Steve Vetterl. Thank you for participating. Please keep the faith, folks. I know it's difficult in times like this. Please do not let yourself get too myopic, meaning that you're focused more on the short term. I promise you, if you continue to get on that path, it will crush you mentally in trading. But we do not want that. So in some further discussions down the road, I'm going to get a little deeper into the psychology of all of this. But for now, we'll just keep it at that. So I do thank everybody for participating. For those that have any questions on it, let me know. Any changes you guys want me to make, and we'll see if we can get it addressed. So stay safe. Have a great week.